a 10-point reward for about a 6-point risk, so about 1.8 R. So we're going to break this trade down in terms of what we were looking for, right? So today I was making a brochure just to break down to people, right? And in that brochure, it's the 3 simple things that we want every trade to have, right? So I call it the triple X model, triple X, because it's 3 things we're looking for. We want to know where to trade from, right? So we need to have our key levels in place. So key level is basically a 15-minute fair value gap. Simply put, right? We're looking for a 15-minute fair value gap. That's all you're looking for, a 15-minute fair value gap. The next thing you're looking for is what to look for specifically. So we're looking for buyers and sellers. So when we enter the key level, we want to know who's in control between buyers and sellers. And the last thing we're looking for is why. They don't have an answer. They cannot point to an answer on the chart as to why they took a buy, why they took a sell. Now, the problem is when you're trading without knowledge of why you're buying and selling, you are a gambler that has a charting addiction. And sellers, so in this case, we're going to be going over passive sellers, right? So this is the whole point of the trade, or any trade you take. So you need to know where to trade from. So 15-minute fair value gap, what to look for. You need to know about buyers and sellers. And the last thing is why. So keep in mind, passive sellers are going to be the point of today. So if we just kind of two-phase manipulation is more powerful. So what we can see is every day we have an Asian session. The Asian session accumulates liquidity. That is the only purpose of the Asian range. So how I define a two-phase manipulation is very simple. If the market sweeps the Asian low and the Asian high before our entry, this is a one-phase and a two-phase manipulation. So what are the phases of manipulation? So when we're looking at a two-phase manipulation with respect to the Asian range, the Asian range has only 2 points we are interested in, the Asian low and the Asian high. So the reason key levels are important is because you are trying to analyze price action inside of those key levels. So with that being said, right, how can we use the two-phase manipulation to our advantage? Now, what makes this a two-phase manipulation is that we've actually taken out the Asian range low and then the Asian range high. So whenever you're looking at the charts, you always want to see how the market has reacted to the Asian session before you make any decisions. If you've not taken out the Asian low or the Asian high, it's probably a range and you want to avoid that day. So knowing when not to trade is just as important as knowing when to trade.